Hello, everyone. This is your girl, Anjanette, and today I am glad you guys decided to join this webinar because I'm going to show you how to purchase stocks. Now, I must say, disclosures, I am not a certified financial advisor, and I am not a professional or certified investment advisor, okay? I can only show you from my experience, and I'm going to show you how I purchase stocks and what I look for when I purchase stocks, or before I purchase stocks, what I look for to make sure that it's a good stock or not. I have to put that out there first, because I can't advise you on what to purchase, and I can't tell you what to purchase. I can only give you from my personal experience what I did when I purchased stocks, how did I look for stocks, so that way you know that I can't give you any advice. I can't tell you what stocks to buy, okay? So guys, I want you to know that this is just for educational purposes only. So I am just giving you information to help you make a decision on how to look for stocks. For those of you that really don't know how to purchase a stock, this kind of will help guide you in the direction of what to look for and kind of give you some guidance on making a decision on what to purchase. Okay. All right. So I'm going to share my screen. I'm not going to prolong this. I'm going to share my screen. So let me start from the beginning. Okay, start from the beginning. Okay, so guys, my name is Anjanette Curry. You see that girl right there? That is me. My name is Anjanette Curry. I am a financial literacy coach, and I teach budgeting, investing, credit repair, how to set up your savings, how to set up your investment accounts. I educate you on those things so you can be more financially literate than you were before, so you can make a decision on how to manifest and create a financially stable life. Okay, so today our webinar is going to be talking about I'm going to be using Fidelity. If you see the sign there, that's where I have all my stocks, and I prefer Fidelity because they have a zero fee, which means that if you buy Fidelity stocks, you don't have to pay a fee. Most stocks that you purchase outside of Fidelity, they have like a $3.95 fee. Some may have more than that. But typically with Fidelity, if you purchase a Fidelity stocks, you don't have to pay any fees. And that's what I like about them. So most of all my stocks I have are Fidelity stocks. Okay. So at the end, and I need you guys to stay with me to the end of this video, because I'm going to go into my account and show you guys how to actually set up your account, and then how to actually purchase stocks. Now you can use this video as a educational guide, but don't buy the stocks. I can't tell you to purchase the stocks that I purchased. I'm just showing you what I did, what stocks I purchased, and why I purchased those stocks. So you can use that as a guide to learn how to purchase your own stocks. Okay. So I hope that this helps. I'm going to move this down just a little bit. Okay. And I'm still may be up top, but to me, I've moved the screen down and it still may be up top. So guys, I hope this works. So let's get started. I'm going to show you how to trade stocks using Fidelity Investments, and it's a beginner's guide to buying and selling stocks. Now, if you've been buying stocks before, this is not the video for you. I am just going to show like a brief overview of what stocks are, to give you some definitions. So that way, when you do go into Fidelity, you know what you're looking for, and it kind of guides you. And then you can go back and watch this video again So that way, while you're in Fidelity, you can have the video up and then have Fidelity up and then go step by step from there. Okay. So I am going to show you how I earned $1,200 in 6 months buying Fidelity stocks. Okay, today is September the 8th. As of September the 8th, I have earned $1,200 um, purchasing stocks. Okay. Again, my name is Anjanette Curry, and my business name is PBS Financial Coaching and Services. You guys can look me up on Facebook. I have a Google business page. Most of the social media, Instagram, TikTok, I am all over social media, guys. So look me up. I am available to you. Like I said, I am a financial coach, which means that I educate you on being sound financially. If you're trying to learn how to budget, invest, create savings plans, investment plans, and side hustles, I help you and assist you on how to create strategies to where you can produce more money. All right. So why should you listen to me? Girl, who are you? Why should I be listening to you? Okay, who are you? So I've been selling, buying and selling stocks since 2017. So I kind of, it's a couple years. I got a couple years. So that means I have 4 years of research and proven data to show that I know what I'm doing. Okay. Usually when you're on a job for 4 years, you know what you're doing. So the current stocks are progressing and producing returns despite the current recession. So the stocks that I purchase are still doing good. Sometimes they'll drop a little bit, but then they'll quickly come back up within they'll rebound themselves within a couple of days. And that's what I like about the stocks. So and I purposely chose those stocks because I knew with the market, no matter what the market does, it's going to outperform the S&P 500, which is the basis of what we use when we're purchasing stocks. So if remember this, make sure your stocks outperform the S&P 500 when you're purchasing stocks. If they're not, and I'm going to show you this. Okay, so I know you're probably saying, what is she talking about? I'm going to show you this. I'm going to show you all of that. So I just wanted to bring that up. When you're purchasing stocks, when you're looking at them, make sure that they are outperforming the S&P 500. Now, I can teach you a simpler way you can understand to get started today. So like I said, this video is for beginners. It's not for you guys that are pros or intermediate intermediate purchasing stocks. Intermediate purchasing stocks is not for you if you've already been purchasing stocks and you're educated on it. This video is only for beginners. Okay, so I'm going to give you some free gifts and added value. So I got some things I need you to do. There's some steps that I need you to do. I need you to download the link that's in the description box. Okay, download that link. You're going to use the link below to get my personal list of high performing stocks. Now, like I said, I'm going to list some high performing stocks, and I just, went online and looked overview of stocks that they have, and then I picked out some high performing ones. Again, disclaimer, I am not telling you to purchase these stocks. I cannot give you any advice on what to purchase. I am just giving you some education, so that way you can be more versed when you're looking for stocks, and use this video as a guide before you purchase stocks. Okay, so join our 724 Facebook group. I want you to look that up in Facebook, 724 group for tips and advice on your personal finance. And again, that 724, what that site is, we are striving to get a 700 credit score in 24 months. I also provide personal finance advice in that too. So it's just not credit repair. I also give budgeting advice. I also give investment advice. I also list side hustles that people post. If I see something on YouTube that I think will help, I provide all of that, guys. So click the link below to sign up for a one-on-one session in which I work with you. So if you want to work with your girl, Anjanette, and you go, hey, look, I need some more education. I need somebody to sit with me one by one and show me how to do this so I know that I'm doing it right. I don't want to do it by myself because I'm afraid that I'm going to mess something up. Reach out to me. Click the link and schedule an appointment so that way at your earliest convenience, and I'll meet with you and we could do a Zoom like we're doing now, and it will not be recorded, or we can do FaceTime, or we could do what is it, the Google Meet. We could do a Google Meet. So guys, whatever social media platform you have or whatever video stream platform you have, we can meet that way. I'll be available to you whenever. So again, let me read this disclaimer. I have to make sure that you understand I am not a certified financial advisor, nor do I claim to be. These are my personal assumptions, so individual results may vary. I suggest you consult with a certified financial advisor before investing. And I have to tell you that because I am not certified and I can't tell you what to do, okay? This is just for educational purposes. All right. Why should you invest in the stock market? Why, Anjanette? You know, am I safe not investing? I'm afraid. There's fear. I hear a lot of things about the stock market. Let me tell you something. One of the best tools to grow human wealth in history is the stock market. If you listen to a lot of the millionaires, the rich people, anybody that got some type of money, they're going to tell you that they invest in stock market. And I know there's some negative stigma out there, but the only negative stigma is for unlearned people. If you're unlearned in financial education, you're going to have some type of negative feeling towards purchasing stocks. And that's, you know, it because I was like that. When I was unlearned and I didn't understand finances, I didn't want to buy stocks because my thing was people was telling me, you're going to lose money. You're going to lose money. So my thing was, I want my money safe. I don't want to lose money. But if you think about it, we lose money all the time. We gamble all the time. People buy lottery tickets, they go to the casinos. You know, we gamble on things all the time. We gamble on relationships. We don't know if that relationship is gonna work out or not. We gamble on relationships. We gamble in school. We gamble. I mean, almost all the choices that we make a gamble. We don't know how it's gonna turn out, but we make a gamble. Okay. Now, savers or losers, battle of inflation, which means assets are better than cash. And what I mean by that, when you have your money in a regular savings account at a bank, it's only making 0.3%. But if you put your money in an investment account like a stock, index fund, mutual funds, something like that, you're going to get between a 5 and 10% return compared to a 0.03%. Okay, in a bank, which is cash, your cash money in a bank, compared to being in an emergency in a investment account. Think about that. The earning potential is like, the ratio is so amazing that you should try and make a decision to do this. And that's the reason why I wanted to do this webinar, because I want you guys to have some type of education to let you know that these people are not investing for nothing. They are getting returns way higher than you would have your money in a regular savings account. Even in a high yield saving account, you're getting like a 2% interest rate. a 1 to 2% interest rate compared to a 5 to 10% interest rate, guys. Come on. And then with your stocks, they compound, which means that they double. So let's say you put your stocks in for 5 years. You purchase stocks and you let it stay in there for 5 years. By the time that 5 years, your stocks would have probably doubled if it maintained that percentage, that interest percentage. If it maintains that interest percentage, your stocks will probably double. But if you leave it 5 years in just a regular savings account, how much money you gonna have? $10 probably, probably $10, and that's it. So I want you guys to think about that. You are losing purchasing power by not investing. If you leave your money in the bank, you are losing purchasing power by just leaving it there. Never been cheaper to invest. Like I told you earlier, with Fidelity, they have 0 trading fees, no fees. If you purchase their stocks, you don't have to pay anything. And that's the wonderful thing, because I know when I first started purchasing stocks, when I first started, the fees was like, I think $3.95 per stock when you purchase stocks. So it was $3.95 per stock. So if I purchased Amazon, that was $3.95. If I purchased Microsoft, that was $3.95. So each stock I would have to have paid $3.95 for each stock. Now it's 0. So you get to use that money to invest, and I love that because that kind of stopped me from purchasing as much as I wanted to purchase because of the fees. But now they've done away with the fees, and that is so awesome for me. So the low expense ratio for solid investment, and what that means with Fidelity, and the reason why I'm saying Fidelity is this is where I got my stock. And so there are other entities where you can purchase stocks from. It doesn't have to be Fidelity, but I'm talking about Fidelity today because that's where I got my stock. That's, what I'm familiar with. And so that's what I want to do my training on. But you can use this training to purchase, to go to other entities also, okay? You don't have to be a genius to do this. You don't have to be a genius. I'm just going to give you an overview of what to look for, and you can go out there and purchase some stocks. You don't have to have it all together. Don't be afraid. You go, oh, I don't know, I might make the wrong decisions. I might buy the wrong. Don't even think about it. Okay. You can always sell them. If the stocks start doing bad, I always like to say, let your stock stay in for at least 6 months to a year. If you don't get a return within that year, then you sell it and purchase something else. So there are strategies that help you grow your wealth over time. Now, one of the best tools to grow human wealth in history. Why should you invest? One of the best tools to grow human wealth in history. The market has averaged 10% annual ROI, return on investment, historically. And what that means is, say you purchasing $100 worth of stocks. It's averaging 10% ROI of that. When you have it in the bank, what is it? 0.3%, 0.03% compared to 10%. Okay, it's a no-brainer, guys. Savers are losers. Uh-oh. Okay. So what exactly is a stock? Here we go. So, let me go back. Oh, no, it's going. So, I'm sorry, guys. It kind of went way past me. So what exactly is a stock? What exactly is a stock? A stock is a share of ownership in a company. Now, I want you to think of each share as being like a slice of pizza. And they're sliced, okay, evenly all around. Now, buying shares give you equity, which is owners' ownership in that share, which means that you own a piece of that pizza. So if you purchase a slice of that pizza, you have ownership with that whole pizza. So it's not just taking that piece of piece of pizza, but you're buying a part of a whole of that pizza, which means, say you want to, and I'm using Amazon as an example. So when you purchase Amazon, I want you to think of this. When you purchase Amazon, you are a part ownership of that company. So you could tell people, I'm part ownership of Amazon. And they go, really? Yeah, I have stocks with Amazon. I'm part ownership, because you really are. You really are. And the way I do mine is I purchase index funds because it has a group of stocks, and we're going to go over that. It has a group of stocks. It has Amazon, Walmart, and this is the best way to do it when you're purchasing stocks. Buy the group of index funds where you can purchase 20, 30, 40 companies, sometimes 100 companies in one stock. And one purchase, one stock, and you got 100 companies in there. I always like to buy stocks that I purchase my products from. Like if I go to the grocery store, I've got stocks in Walmart, Kroger's, Target. I purchase index funds that hold those stocks, so that way I'm part ownership. So I feel good when I'm going in Kroger's. I feel good when I'm going in Walmart. I feel good when I'm ordering online from Target. I feel good when I'm ordering from Amazon, because I own part ownership of that company. So I am investing in my own company. I am investing part of my money in that company so I can get a return. I'm getting paid to shop at my own company. Okay, think about that. So now, shares outstanding for Amazon right now, September the 8th, as of today. Now, if this is later than September the 8th, if you're watching this later than September the 8th, and it may be more and it may be less. Of course, we know the stock market changed. So as today of this video, the shares outstanding is 5,006.44 million. Okay. The share price, if you were to buy that stock today, if you were to buy Amazon today, you would pay $3,524.49. And I know some of you guys going, what? I remember Amazon stocks used to be like $100 and some dollars. I remember that when I first started buying stocks, Amazon stocks was like $199 when I first started buying stocks. And if I would have purchased Amazon stocks then, I probably would be doing very well today, but I didn't because I was limited in funds. And for some reason, I didn't choose Amazon at that time, but I should have. I should have chosen Amazon, but it was a reason why I didn't. But it would have been worth $3,524.49 compared to $199. Guys, do the math on that. So the market capitalization, shares outstanding times shares price. So to get the market capitalization, you're gonna do the shares outstanding, which is the 506.44 million, times the share price, which is the $3,524.49. So when you do that, you're going to get 1.78 trillion. So the actual cost is 1.78 trillion. This is how much they are evaluating this company. This company is worth 1.78 trillion. Or 178 trillion. Okay. Companies are typically measured by their market cap. Okay. So the market cap for Amazon is 1.78 trillion, guys. Amazing. Okay. Market cap changes over time because share prices and shares outstanding can change over time. And that's what you'll see. Like, you may look at Amazon one day and it's $3,524.49. And then you may look at it the next day and it's 3,400, 424 cents. So it changes over time, day to day, minute by minute, it changes. So it doesn't stay the same. Buying and selling a company stock drives share price. Now, corporations, why do companies issue stocks? Why? Why do they, what's the purpose of it? So corporations issue stocks to raise money for their business. That it could be like to fund a new product line. If they're trying to, they need the funds to get a new product line. Research and development, if they're trying to buy a new building or to figure out a way that they can save more money. Invest in growth. If they're trying to grow their scale and grow their company, pay off debt. A lot of them issue stocks to pay off debt because they can issue and stocks are just like a ownership in the company for money that you give me. So you paying me for 10% ownership of my company, or 5% ownership, or 25% ownership. So the amount you pay determines the ownership you have in that company. So your part ownership. Now, preferred stocks and common stocks. Let's talk about what are preferred stocks and what are common stocks. So preferred stocks are stocks that don't have any voting rights. These are the headhunters. These are the millionaires and billionaires. You can afford to purchase preferred stocks. These are people that's coming in. They get to know first because they can buy like $100,000 worth of stocks. So they get the first dibs because they are preferred customers, because they are spending the most amount of money. Now for us that we're buying, we are called common, we're getting common stocks, and we have voting rights. So when you start buying stocks, you're going to start getting emails to ask you to vote for the management, the person that manages the stocks and things like that. So because you're part ownership, you get to make that decision and you get to vote who works for that company, who overheads that company. So you get to vote for that. Now, the common stocks are last in line and they get paid out in case of liquidation. So let's say if the company is not doing good, and they have to liquidate, which means that they have to file bankruptcy and they got to sell all their stocks, because they're closing their company. They're not gonna be there anymore and they need to sell all their stocks. And so the reason why they do that is because they're trying to liquidate what they call liquidate. So what they'll do, they'll pay the preferred people first. The preferred people, because they put in the most investment, the highest investment, they get paid first. And then once they get paid, then the common people get paid after that. We're the last in line after they liquidate. So we're the last to get paid dividends, okay? So the more you purchase, the more you would get. And that's typically it. So you're usually buying common stocks when you're buying stocks. That's for people that's, you're paying $3,000 for the stocks. If you see a stock that you're purchasing on the stock market, you are a common, you're purchasing common stocks. Okay, you're purchasing common stocks. Now the preferred people, they don't purchase stocks like we purchase stocks. They have a financial advisor, a stockbroker, what they call a stockbroker, and they go in at the stock market and they purchase the stocks right then. you know, and then whatever's left is funneled down to us. Okay. So let's talk about how stocks are categorized. These are categories when you're purchasing stocks, and this is all gonna make sense, guys, when I take you in. The reason why I'm going over this is because I want to give you some definitions, so that way when I go in and show you how to purchase the stocks, you know what I'm talking about. You know what I'm talking about. Okay. So large cap, they're purchased. The stocks are categorized in 4 different categories. So we have, I'm sorry, 3 different categories. We have large cap, we have mid cap, and then we have small cap. So the market cap equals the shares outstanding times the shares price. So the large cap companies are the companies that are, the revenue is $10 billion or higher. These are large cap companies. The market cap. The market cap is $10 billion or higher. These are large cap companies. This is typically hard to achieve massive growth due to the size. A proven track record over many years, frequently offer dividends. So this is your Microsoft. Microsoft, I think, is 10 billion market cap. Nike, I believe, is about 10 billion. Let's see, you could probably name some that are with the market cap, and you're going to see the market cap. I'm going to go in and show you that, so that way you can see. Mid cap companies are not quite as large as large cap, and more established track record than small cap. This is your Walmart, your Kroger's, things like that. Their mid cap is between 2 billion and 10 billion market cap. So the market cap is between 2 billion and 10 billion. Okay. Often target managers and acquisitions. Okay. So these are the companies that get bought out. So when you hear of a merger or acquisition, like another company, like Wells Fargo bought out another bank, or um, um, another company bought out another company. So when you hear things like an acquisition or a merger, they're probably mid-cap companies. Okay. Small cap companies are companies that have market cap between 300 million and 2 billion. Okay, typically younger and are seeking aggressive growth. These are higher risk and don't typically offer dividends. These are your new upcoming companies. Most of them are tech companies that are coming in. They're ranging from 3 million to 2 billion. So these are your freshly new companies that are trying to perform. Now, how stocks are categorized again, we have growth stocks. Growth stocks are your big potential for growth, outpacing in the market, like your Amazon, Facebook, Microsoft, typically low or no dividends, reinvesting retained earnings. So when you go in and start purchasing stocks, some of those are going to ask you if you would like to reinvest those stocks. These are stocks like companies like Amazon, Facebook, and that's what they're meaning. They're growth stocks. So you can reinvest those stocks, your earnings. You can reinvest what you earn. You can put it back out there and say, I want to buy more and reinvest. Okay. So income stocks are regular dividend payments. These are your 3Ms, Walmart, and then Verizon stores. So these are income-driven stocks, which means that they pay a dividend. Their proven track record, model, consistent increase in dividends. If you need more explanation, click here and make an appointment with me. So if you need more explanation on this, guys, again, reach out. I am here to help you. I know this probably is like, what is she saying? But it's gonna make sense. It's gonna make sense in the end if you stay with me and I show you how to purchase the stocks, it's all gonna make sense. So the value stocks perceived to be trading below its fundamental PE ratio, PB ratio, typically seen as unfavorable in the market. So value stocks, I'm going to show you some of those also so you can get an idea of what value stocks are. So stock sectors, how stocks are categorized. Stock sectors. Stock sectors are an area of economy in which business shares a product or service. So when you purchase stocks, they're categorized in sectors. You have the energy, materials, industrial, consumer discretionary, consumer staples, healthcare, financials, information technology, telecommunication, utilities, and real estate. So these are the categories that the stocks are placed in. So if you buy like the energy stocks, these are your oil, your gas, coal, fuel. Materials are chemical companies, metal companies, paper companies. Industrial, defense mechanism, aerospace, manufacturing company. Consumer discretionary, these are the apparel, household products, etc. Okay, guys. So remember the stock sectors because you're going to see those and I'll show you those also. How risky is it, isn't it? Understanding your risk. How risky is it? I'm going to be honest with you guys and tell you the truth. Okay. Now, the chances that your actual outcome were different from your expected outcome, it's a bit risky, but you got to think about it. 10%, 0.3%. Where do you want your money? 10%, 0.3%. If I leave it 10% here for at least a year, do I know how much money I'm going to make compared to me leaving it at 0.3% here for a year? Yeah, it's stable over here, but I'm not making any money. Yes, I can lose money, but I would rather risk it because I know that I'm going to earn way more than over here. Okay. So you got to think about that. So the risk is understanding that you may lose some or all your investment. And I understand that and I'm okay with that because I've been investing for 4 years and I've heard, the 2008 stock market crash when a lot of people lost their money, people went bankrupt, and I do understand that, but I would rather risk my money because I'm making money. And I've seen over the last 4 years that I've earned a lot of cash. Now, within the last 6 months during this coronavirus time, I've earned $1,200 in 6 months. And it's during the bad downturn, as they say, but I still earn money. I'm not losing any money. So I think the risk should be, equals to the reward. So it's up to you to decide if you want to invest or not. But I would say do your due diligence and investigate and do your research. Guys, do your research. Don't make a conscious decision right now. I want you to talk to some people that are investing. Talk to them. If you have friends or coworkers or anybody that's investing in the stock market, have a conversation with them and ask them what they think. As an investor, we are compensated for the level of risk real soon. Now, I want you to remember that and kind of put that in the back of your head. So if I keep my money in a savings account making 0.3%, yeah, I still got my $10,000, but I'm not making any extra money. And they're lending your money out. They're lending your money out, making $10,000 probably a day, and you're stuck when you could be making $10,000 in 5 years or more. So think about that. So investing in a startup versus a savings account. Now, types of stocks and equities, what to buy. We have individual stocks, we got mutual funds, we got index funds, exchange traded funds, which is called ETF. So if you hear that, that is what that means. Exchange traded funds, ETF. REITs is real estate. This is all your real estate stocks. I purchase mutual funds and index funds. I have some REITs also. Um, I did some individual stocks, just a little bit, dabble with that, but I mostly purchase mutual funds and index funds because you can bundle 100 companies in one index fund or one mutual fund. You can bundle 50 companies in one mutual fund. You can bundle 100 companies in one index fund. Individual stocks is you're just buying one stock. You're just buying a stock of Nike just by itself, or Microsoft, or you're buying separate stocks. But mutual funds, you can group companies together. Index funds, you can group companies together. So remember that. Now, how do you know what to buy? How do you know what to buy? So let's break each stock down. Individual stocks. The pros for individual stocks, like I said, you're just buying one stock of Nike by itself. Reduced, there are no fees, which is pretty good. No management fees to own stocks because you're buying through Fidelity, so you don't have any management fees. You have complete control, understanding that you own those stocks. Taxes are easy to manage. Capital gains versus loss. Okay. So the cons, what's the hard part? What's the bad part of buying individual stocks? Hard to diversify, need 20 to 100 stocks to type to achieve adequate diversification. That means you're going to need 20 different companies. Nike, Fila, what else we have? Polo. You're going to need 20 different companies in order to get a adequate diversification. That means a solid diversification where if you just buy, Nike stock, if Nike go down, you done lost everything you got. So diversification means you're buying different stocks. So if one company go down, you still got the other company that's producing income for you or producing investments for you. So more effort, time to monitor portfolio, which means that, rebalancing, you can go back to the drawing board. Fear of missing out, emotions, which means that, if you're only buying the drawback of what am I missing out on if I'm just buying Nike stocks and not trying to diversify and buy other stocks. So how do you know what to buy? Mutual funds, pros and cons of mutual funds is it liquid. You can sell it as fast. It's diverse, which means that they have a group of companies in one, and that's what it means. Professional management, which means that it can be active or passive. Active means you have a financial advisor managing, you having someone, an entity managing it for you, and then passive is you're managing it yourself. I am passive. I manage my mutual funds myself. I don't have anybody over it because I know what I like. I don't want somebody else choosing my stocks for me. I want to go in and do my own investigation and choose for myself. And that's the thing about passive. Lots of options. You can have balance, fixed income, money market income, and things like that. The cons is they're higher fees, not FDIC insured, large cash holdings, and harder to evaluate apples to apples, okay? Because there's so many companies in one. So it's hard to evaluate because of so many companies. Index funds. Pros, low fees, outperforms active management. And this is why a lot of people choose index funds because of the low fees. And they always outperform active management over time. They're easy to own, manage, invest in, and achieve your goals at a quicker pace than you would with the others. Okay. The cons is no control over holding, lack of downside protection, which means it's not a hedge fund, and lack of different strategies, which means that if you have somebody, you got all these companies, you have to invest in that. You can't just pull companies out of that grouping. They have to stay in that grouping. So if a set of companies does bad, you may lose, but you can't say, okay, I don't want Walmart. Can I change it out? You can't. You can't. You're not going to be able to. Now, ETFs. This is your basket of stocks to mimic a certain market sector to trade on exchange. So the pros to this is access to many stocks. Again, ETF is your bundle also. Low expense ratios, just like the index funds. Easy to own, manage just like the index funds. They have actively managed ETFs, have higher fees, which means if you get the company to manage your ETFs, then the fees are going to be higher. Lack of downside protection, which means that it's not a hedge fund, which means that you could have you could be more at risk, and then the diversification is limited because all the companies are bundled together. REITs, these are your real estate investment trusts. So when you see REITs, I say REITs. When you see REITs, they call them REITs. When you see these is gonna be your typical all real estate. This is a company that owns, operates, and finances income producing real estate. Okay. So you'll have access to a historically unaccessible asset class. It's pretty liquid, it's stable, cash flow through dividends, have to pay out 90% of income, historically a sound asset class. Cons is dividends are not taxed on a regular income, subject to market risk, economy downturn like 2008, and then can have high management fees. So if you're getting someone to manage your REITs, then the fees could, eat up your return. So those are things that you have to take into account when you're wanting to purchase stocks. You got to look and see which one is best for you. So how to evaluate a stock company. So let's look at Amazon like we did. I kind of called out Amazon earlier. So let's look at Amazon. So the PE ratio, a company share price. So it's earnings per share. So that's what that means. So when we look at the PE ratio, let me find it. There it is, the PE ratio right here, 61.16. So the PE ratio right here, we always want to look at that. That is a pretty stable stock when it's 61 or higher. It means that it's going to perform pretty well. Okay. It's going to perform, and this was captured again September the 8th, 2021. So the PE ratio, when you go in and look at Amazon, it may be totally different from this 61. Okay. So but we want to make sure that we look at the PE ratio when we're looking at stocks. So you're going to go in and type in Amazon, and it's going to look like this. So the first thing you want to look at is the PE ratio. If it's 61.16 or higher, you're looking at a pretty good stock. Okay. Then we're going to look at the financial statements. So you want to click on the company's financial statements. How stable is this company? How are they taking care of their bills, their liabilities? Are they making any money? Are they grossing profits? Or are they losing money? So you want to look and see how stable this company is. The balance sheet. every company on the stock market has a financial statement. So the balance sheet, their assets, this is in millions. So $360,319. That's how much, assets they have. The liabilities, okay. The debt to asset ratio is 68.1%. That's what we looked at, okay. Income statement, the net sales, gross profit, profit margin, 50.36%. Cash flow, their operating cash flow is 16,928, and then the net cash flow is a negative 1,651. You want to make sure you're looking at these things, okay? Now, bullish or bearish, and I know when you look at stocks, I want you to look at this. So bullish means green. We always want to buy stocks that are bullish, that's in the green here. It's a good deal. When you see that, when it says bullish, it's a go, okay? It's a go. If it's in the red, it's bearish. Bearish. You see here, bearish, very bearish. So when it goes down, it's a no-go. We don't want to invest in that stock, okay? That's me. Now, I'm just telling you what I do, okay? So you make your own decisions. Like I said, I'm not a financial advisor, but when I look at a stock, if it says that it's bearish, or if it's in the red here, if it's in the red, I won't purchase it. But if it's in the green, then I'll think about it. I'll look at everything else, but I'm always gonna go with the bullish stocks, okay? That's how I separate my stock. I'll separate by bullish and bearish. If it's bearish, okay, I don't want to look at it. I'm not gonna look at it. If it's bullish, I'm gonna put them in line and I'm gonna write them down, okay? So again, that's what you want to look at, and I'm giving you quick, okay. There are more in-depth training on YouTube that you can look at to explain it better. But I'm just trying to get you in to show you what to look at quickly, so that way you can kind of, purchase your first stocks. Okay. Now, how to evaluate a company? We're going to look at the earnings per share. If you look at this, they're earning 1409, then it went up to 1579, then it went down a little bit at 1512. Guys, so this one, it says best, and when you see best, I mean, that's good compared to the market. This is compared to the S&P 500. So this is what is performing compared to the S&P 500, guys. Look how, and that's what I try to tell you, to purchase stocks that is outperforming the S&P 500. Make sure you are purchasing stocks that are outperforming the S&P 500, okay? So earnings per share is the EPS, $57.38. Look at this. It has increased by this amount. So earnings per share, industry average, S&P 500. You see how much this is outperforming the S&P 500? Look at that. PE, 61.17. The market the industry is 48.69. It is outperforming. So, I will purchase this stock. I would purchase this stock because it's doing so well. This is what you want to look at. Now, again, you want to also look at your metrics. You want to pull this up. Now, you see how this is slowly going up? How it's going up, you want to make sure you look at that. That means that this is growing. It has potential for growth. This company is growing. If you see a company that's going down like that, oh no, you don't want to purchase that, because that means that it's declining, it's not making money, something is going wrong within the infrastructure, and it's probably going to end up filing bankruptcy after a while. So I try not to. I just don't even go that way. I don't even look at them. So if I see a company that's going up like this, and like I said, this is a quick overview. This is the quick version, okay, to show you how to purchase stocks. So you look at the line. If the line is producing and growing, then hey, it's a go. All right, this is a good company. Now, I've gotten to the end, guys. I hope you guys stay with me. Thank you guys for staying with me because we're going to do a live demo. I'm going to go into my account and I'm going to purchase some stocks. We're going to purchase some stocks together, okay? So let's buy and sell our first stock together, okay? So then I got some tips here for trading stocks. We're going to open an account with a respected broker online or in person. So what I'm going to do, I'm going to go to Fidelity, okay? And I'm going to show you how. My mouse is going crazy here. So let's buy and sell our first stock together. Make sure you have at least $50 to $100 to deposit into your stock account. Now, if you don't have the money, pause this video and then, once you get the money into your account so you can fund your account, then you come back to this video, okay? I'm going to post this video on YouTube so that way you can have access to it and you can come back to it, okay? Now, we're going to log into fidelity.com. Fidelity.com. We're going to log into fidelity.com. We're going to click open an account. We're going to select the type of account. We're going to use Roth IRA for today, okay? We're going to open a Roth IRA account. Follow the instructions and enter requested information. When you're done, fund your account, okay? So all you're doing is you're going to select the type of account and then you're going to follow the instructions from there. So I'm going to go here. My mouth is going crazy, guys. And I'm gonna go here. And let's go to Fidelity. Oh, I already got it pulled up. So I'm gonna go ahead and log in. My username. My username. Let's see if that works. All right, we are in. So if you look at my I was supposed to show you guys how to open an account. I just logged in. Let me show you. Fidelity. So we're going to go to fidelity.com and then you're going to click, I'm going to do log out. Okay. So we're going to go to home. We're going to the home screen. We're going to click open an account. And I don't know why my mouth is just going haywire, but you're going to click open an account. You're going to do the Roth. We're opening the Roth IRA. Now you get to choose whatever one you want. You don't have to choose what I choose, okay? You can choose whatever one whichever one you want. You can do the rollover. And rollovers are if you were at a job that was doing a 401k and you left that job and you have stocks, you can roll it over into a Fidelity account or whatever management account that you want, investment account that you want, okay? You don't have to choose Fidelity. You can choose another investment firm. I chose Fidelity because I was familiar with it and it seemed pretty easy to function. And then the fees, there's no fees, okay? So we're gonna click on open Roth IRA account. Open now. It says, are you a Fidelity customer? And I don't know why my mouse is just going crazy. So we're going to click no. Then you're going to click next. You're going to put your information in there. Where do you live? Okay. You're going to put all of that in there. And then just follow it all the way through. Once you finish, then it's going to ask you to fund your account. When you get ready to fund your account, it's going to ask you to upload. I want you to either $50 or $100, whatever you have. I want you to transfer that money. Now, it may take a couple of days for it to transfer, but once it transfers, the next step that I'm about to show you, this is what you're going to do once your money transferred to your account. Okay. So I'm going to go back to my Fidelity account, and this honestly is my account, guys. So I have three. I have an individual, and as you see, you know, this is, I just got some penny stocks in that, and then I got to log back in. Okay. So this is my individual stocks, and I purchased some penny stocks there, and it wasn't doing good. I kind of lost some money in that. And I purchased some marijuana stocks, which is not doing good because they legalized marijuana now. So I just wanted to dabble, because at one time marijuana stocks was the thing to purchase. It was doing pretty good, but now since they've legalized marijuana, it is not performing as well as it did before. So I just chose not to purchase anymore, and I just got it just sitting there. Okay, my rollover IRA, that is my retirement account. When I worked at a community college, I rolled it over. When I left there, I rolled over some of it. I didn't roll over all of it, but I rolled over some of it into my rollover IRA. And then here's my Roth IRA. Okay. So this is my Roth IRA. All right. So if you look today, my stocks have gained $167.61 just for today. Just for today, my stocks have earned $167.61. So I'm gonna, and the rollover Roth is the same as the regular Roth IRA. So I have my money in a rollover, so I'm gonna use that one to show you how to purchase stocks, but it's the same for each account. Whether it's an individual Roth IRA or rollover IRA, the steps are the same. I don't know why my mouse is acting up. So guys, if you look right now, with the market, I've earned $167 today. My rate of return right now, as of 9/30/2021, is 5.32%. That's a lot better than 0.03%. Now, a couple of weeks ago, I believe it was at 10%, but the market kind of dropped a little bit. So I'm looking for this to come up. The next time they evaluate my stocks, it's gonna go up. And I do believe in a couple days, a couple days, it's gonna go back up to 10%. So I'm not, you know, I'm not pulling anything out because I know the market. I've been doing this for 4 years and I know what it's gonna do. So I'm gonna click on my rollover, and then, okay, I'm gonna show you, this is the summary section, what you see here. And this just shows a summary, and you see what I was telling you about the stocks. Look at, this is what I've been contributing right here. These are my contributions and how my stocks have grown. So if you see right here, it dipped right here, you know, kind of a lot. Then I didn't pull anything out. I kept it in there. And then it went back up and it outperformed the dip and it went back up and doubled. And then it dropped a little bit here. And if you see now, it's going back up. So this is the asset allocation. You remember we were talking about the domestic, foreign, bonds, short term. This is what I have. I've got most of my stocks in domestic. Foreign is overseas. Bonds are your mutual, your bonds. I don't have anything in bonds. And then short term, S&P 500, always purchase a stock that is outperforming the S&P 500. And I'm going to show you how to do that. Now, let's go to positions. Now, I'm going to show you the stocks that I have. I can't tell you to purchase these stocks. This is just for educational purposes. And I know I should be showing you what I'm investing in, but I'm doing this to show you how to purchase stocks, okay? Just because I purchase these stocks don't mean that you're supposed to purchase them. I want you to use your own professional judgment, your own judgment. Do your research. Do what I'm telling you to do, so that way you know you're making a conscious decision and purchasing something that's best for you, okay? So what you're gonna see is what's best for Anjanette, okay? This is, after I've done my research, this is what I have decided to invest in, okay? So with I click on positions, you're gonna click on positions, and here the specs is the money that you have to invest in. So when you see that, that's the money that you have to invest. So this is the money that I have left to invest. These are the stocks that I'm investing in. I want to show you an index fund. So you can see what I'm talking about. I think it's this. Yeah, this one is an index fund. You remember I was talking about an index fund. I want you to see. This one has how many companies? If you look here, see how that's growing? It dropped a little bit, but it's going back up. Look at all these companies. It says 250 holdings. Holdings mean companies. So there's 250 companies in this index fund that I can invest in. Microsoft, Apple, Amazon, Facebook, Google, Berkshire Hathaway, Nvidia, United Health Group, Johnson & Johnson. And you remember I told you, remember we said the large cap? This is a large cap. This is technology, I believe. Go to, find it. I think it's a technology. Let's click on that bench chart and see what we find. So this is just the show you how the stock is performing, and it's performing very well. Very well. It's right at 2205 right now. And when I purchased the stock, I think it was in February. So I purchased it at 19. If you look up here, as it changes, this is where the price of the stock was at that time. So if you look January 29, 2021, it was at 18.95. Now today, if you purchase this stock, my mouse is doing some all kind of stuff. It's at 22.65. That's pretty good. Let's go back out. Let's move this, and we're gonna go back out. So, and then in order to trade stocks, you're gonna hit trade. So to search the type of stocks that you want, you can just type in the name. And you see Microsoft come up. Let me move. And you see Microsoft come up. And if you click on it, it'll pull up that stock for you. And the MSFC is the ticker symbol. It's the ticker symbol. So if you see that, that means that's the ticker. So if you hear somebody say the ticker symbol, that's what that means, the ticker symbol. Let me get my, I got a notepad of what type of stocks I'm going to buy tonight. Let me get that right quick. Should have had that together, guys. I apologize for that. I forgot to take it out. And I honestly forgot to take it out. But I put it in my, I keep it in my purse. And now I'm trying to find it. Oh, I got it. Okay. I found it, guys. I'm sorry. I usually keep it in my purse so I wouldn't forget. And I forgot to take it out before I did this video. So let me show you the stock that I wanted to do. So if you look here at Microsoft, if you want to purchase this stock now, you will purchase it at 302.75. Today it performed well at 6.44, which means that it risen, it closed, which means that stock market opened at 9 o'clock, I believe, or 5 o'clock, and then they start trading at 9, and then it'll close, I think, about 5 o'clock, and then they'll stop trading. So once it closed, when it closes, that means that it closed at more than what it opened. It closed for more than what it opened, which means that they earned money. So 2.17% more than what it opened at. So it closed at one price and opened at another price. So if you look at here, so it opened at $299.21, and then it closed at $302.75. That means that they made a profit. They made a profit. So you want to look at that. So it opened, then it closed, and they made $6.44. Okay, so let's see, or 6.44%. PE ratio, you remember we looked at that, 36.79. Annual dividends, 2.48. That's how much they actually make, you know, the annual dividends. Dividend expense date, well, the dividends where they pay out is going to be 11/17/2021. So they're going to pay the dividends out on November the 17th. And remember, I was telling you about Bullish and Bearish. Remember, this one is a 6.9, and it is bullish. It's not bearish. So it's a 6.9, which means that it is bullish, which means that this is a very good stock. Okay. Now, remember, I told you to look and see how the stock has been performing over time. It is performing well. It is producing income, which means that they are getting dividends, they are making money from this, okay? So it's producing well. And then let's go to the dividends earnings. Look at the growth. Look at the growth right here. The growth. Look at that. Yeah, it's growing. Look at that. 203, 203, 217. Remember I showed you Microsoft? Doing good. EPS. Remember Microsoft? Remember I showed you? Look at that. And this is today. This is today. Okay, look at that. EPS growth 40%. Microsoft dividend yield strength is strong at 84%. Market medium analysis valuation overvaluated at 69%. Quality growth. Look how the man is growing 93%. That is amazing. Microsoft is growing. Financial health 61%. So it's pretty strong. It's a pretty strong and healthy stock. We don't see anything changing in the future. So guys, and like I said, if you wanted to purchase, you would click buy, and then if you wanted to sell, you would click sell. Okay, and let's go to, this is what I was, remember what we saw? 6.9 is at 6.9. I think it was at 3 point something then. Look at that. It is very bullish. Okay, it's bullish. So let's go to the stock that I wanted to purchase. I'm gonna put in a ticker symbol, and I'm gonna put this ticker symbol in. This is the stock. It's LXAIX. So it's a Fidelity index fund, and I want to purchase this stock. Go here. Kind of see. So let's look at this stock, okay? Overall rating is a 5. Returns is high, so I'm gonna get my money. I see that. The expenses is low. I don't have to worry about paying high expenses with this stock. The risk category is like in the middle. So I know this stock is pretty stable. Year to date is performing, year to date as of September 30th, is performing at 17.48%. That's better than 10% at 17.48%. This is year to date. We also want to look at our growth. It started out at 29.99, and then it is going to 5 years from now, it'll be 16.88% projecting now. This is the average annual returns. And then 10 years from now, if I keep this stock for 10 years, I am projecting 16.62%. Now, remember, the average return on stocks is at 10%. So this is performing at 16.62%. So this is a pretty stable stock. And then let's look at the hypothetical growth on $10,000. So remember I told you it must outperform the S&P 500. When you're buying a stock, make sure that it outperforms the S&P 500. So we are in the purple here. So when we look at it, it is right with the S&P 500. So yeah, it's and it's actually performing better. So if you look here, it is performing better. Let's go here. So let's see, the FAIX is 46,543. The S&P is 46,586. So just a little bit higher. But I think this is a pretty stable stock, and I think I'm gonna stick with it. And it has 509 companies. 509 companies, 27.36% of total portfolio. These are the top 10 companies within this index funds. So we got Apple, Microsoft, Amazon, Facebook, Google, and remember Amazon, that in order to purchase just a regular Amazon stock, it was going to be $3,000 and something dollars. So to keep from having to pay the $3,000 just purchasing Amazon, you can buy index funds and you can still get a part of Amazon. Microsoft was $300 and some dollars. I am still getting a part of my Apple, Microsoft, Amazon, Facebook, Google, Berkshire, Tesla. I am investing part ownership in all of these companies just by buying this index fund right here. So now we're going to click on buy because I think this is a good buy. We're going to click on buy. These are your, I'm going to trade mutual funds. So I'm not going to, I want to, I don't want to trade. I want to buy. Back out. I don't know why it's there. I want to buy. So we're going to click on buy. I'm going to use my rollover, which I have $504. Fixed income, conditional stock ETFs. Okay. All of the mutual options. My options. I don't want to do that either. Okay. So we're going to click on mutual funds. And then we're going to go to action. I want to buy. Dollar amount is, I have $504.73. And that's the good thing about Fidelity, because if you only got $50, you're going to put $50 in here. And that's how much you got. So we're going to hit trade, and I click on mutual funds, then account, which is my account. It's telling me how much money I got to spend. The symbol that I'm purchasing is FXAIX. So there it is. So it's pulling it up. And then the action is I want to buy, and the dollar amount. And I don't know why I did that. And it kind of threw me for a loop because I knew I was supposed to see this right here. And I don't know why it showed the other thing, but this is the way it's supposed to look when you're purchasing. And so I'm buying this. So you put the stock ticker symbol here, and then you choose mutual funds. You got $504.73. So I'm going to say the dollar amount, I'm going to put $504.73. That's how much I have to purchase stock with. Okay. So you're going to click preview order. And there you go. The trade will be completed at the next available price, which means that when the stock market open back up, it will be traded. It's gonna be they'll purchase the stock when the stock market open back up in the morning. It is kind of late tonight, so I'm purchasing this after the market closed. So if it opens at a lower rate, at a lower price than what it closed at, then I'll lose. I'll purchase it. No, actually, I'll actually win. If I get to purchase it lower, then I'll actually win. And then if it goes up, I'll make you know, some dividends. So guys, this is how you purchase stocks. You're going to click place order, order placed. There you go. And then you can click on manage orders if you want to view positions, or you want to buy some more stocks, you can. But like I said, that's how you buy stocks. I hope this video wasn't long, and I hope I kind of explained it a little bit to where you can kind of understand. Go on YouTube. There are countless other videos that you can watch to kind of show you how to do this, probably at a more understandable but this is my short version, ghetto version of how to purchase stocks quick, in a hurry, without having to go through all the training, trying to learn this. Now, if it's something that you want to dive into and you want to learn everything, then of course go on YouTube and watch binge watch as many investing videos as you can, so that way you get a better understanding. Again, if you need assistance on how to do this, I can do a one-on-one with you. We can do a Zoom, FaceTime, or however you want to do it, and I will guide you step by step on how to do it. So reach out to me, guys. Thank you guys for hanging out with me tonight, and I will list a link at the end of this video, so you can click in the description box to get a list of the high performing stocks. I'm gonna list 5 high performing stocks for you guys, that is performing right now, that's performing well, that is in line or outperforming the S&P 500. Now, again, you don't have to invest in those stocks. It's just something that I did my research on, that I wanted to give as a freebie. And I can't tell you to invest in those stocks. So do your research. And if it's something that you like, buy them. If you don't want to, you don't have to. Okay. Thanks, guys. I am going to stop sharing my screen. I'm going to, I can view my positions. I want to show you guys this right. So if you click view your positions, it's going to take you back to your stocks that you had. And that way you get to view how your stocks are performing. My stock closed, I made $167 today, and I hope they continue to perform well, guys. So I will talk to you guys later. Thank you all. I appreciate you. This is Anjanette Curry with PBS Financial Coaching and Services. Stop share. So this is Anjanette with PBS Financial Coaching and Services. I hope you learned something tonight. Thank you guys for hanging out with me. Don't forget to click in the description box and get the link of the 5 high performance stocks for free that I'm going to share with you guys. And I will also put a link to my website, and then I'll put a link for you to make an appointment with me if you want to do a one-on-one. Thanks, guys. Have a nice night.